Hello and welcome to Commodity Ki Pathshala, brought to you by NCDX, IPF Trust and Moneycontrol. The spotlight today is on unique ways of trading in agri-commodity derivatives. We all have seen ample liquidity into the international markets, and that has prompted investors to diversify into agro-commodities also, which offer innovative strategies like calendar spreads and arbitrages for institutional and retail trade. Well, the sectoral and composite indices also offer hassle-free exposure to a basket of commodities. Let's understand why indices is a better choice for portfolio diversification in agricultural commodities. Also, during the course of next 1 hour, we'll talk about spreads, other trading strategies in agri space, on how you can benefit from all of this as an asset class. Joining us is a very eminent panel. We are joined by Mr. Abhishek Rajarkar. He's AVP Quant and Market Structure, NCDEX. I also have with me Viral Shah, who's EVP IFL Wealth Management, and Vikram Dhawan is Fund Manager and Head Commodities Nippon India Mutual Fund. Gentlemen, thank you so much for joining us today. Viral, let's start this conversation with you. First of all, about the kind of liquidity that we've seen into this market, also the fact that people want to diversify their portfolio, and agriculture in some sense really has found a way into that.
Yeah, Manisha, thanks for the introduction. Well, it's been a very, very interesting time for the agricultural commodities market. I would say that after almost about 5 to 7 years, we have seen a bull market, a structural bull market that has come into the agricultural commodities segment. A lot to do is obviously with the supply side disruptions that have happened due to the COVID-related phenomena across the world. And but the more part of it is the fact that the huge amount of fiscal stimulus is also prompting a resurgence in demand, and that is creating a bullish sentiment where everything from corn to soybean to palm oil, everything has gone up over the last 6 months to a year. And that has again prompted for a lot of retail investors to start participating back into the agricultural commodity space. We have seen a phenomenal rise in prices of soybean, mustard seed, soya oil in the Indian context, as well as pulses like chana as well. A lot of innovative strategies have also come across, as you mentioned at the start of the program, where people do not want to take a flat exposure. And I say a flat exposure in terms of deciding that the prices of a commodity will rise by a factor of 2, 3, 4, 5%, but rather in terms of how does the month-on-month calendar spread, the difference between the current month and the next month, or the difference between two agricultural commodities who could be substitutes for each other. How does the equation work over there? So that is a sign of a maturing market, a market which is willing to experiment, which is willing to put in the homework. Many of us are attuned to the fact that on the equity segment, there are pair trades that people do between one auto stock and the other, between one bank and the other bank. Similar kind of strategies are also coming even on the agricultural commodity side, where people look at the replacement value of one edible oil versus the other, or in some instances, they also look at what is the value of the product like a soybean versus a soya oil, and whether there are some arbitrage opportunities that you can gather from there. So this is a sign or beginning of a market which is willing to look at the internal working of that. A lot of brokerages are doing a lot of work on that, as well as with the addition of the fund management space coming into it. I'm sure that a lot of these new opportunities will be exploited by market participants. So we are seeing a resurgence in terms of volumes and definitely new set of investors which are willing to look at this space.
I'm sorry. Vikram, this one is to you. With COVID-19 and the fact that we also have seen a lot of liquidity come into the markets and a lot of sophisticated instruments into the market, and the fact that investors are ready to explore into this, how has the experience been for the last 1 year for you?
So I think, Manisha, what has really changed and actually the trend was already in force even before COVID started. Commodities have now become more of a supply side, story than a demand side. And what COVID did was it further, created a lot of hurdles and obstacles for lot of fringe capacities in most commodities. We are talking about bulk commodities like oil to steel and even agri commodities also. So it's created some sort of, a sort of an artificial shortage. And COVID has actually, accentuated that trend. How long the trend will continue, it's obviously anybody's guess. But I think the way things are looking from the commodity point of view, especially from the from Indian perspective, I think we probably are in some sort of a bull market, which is driven more by supply restrictions, and that may have more to run, and then what people may like to think about it. Also, particularly from the fund perspective type, there are a couple of things which really excite us, and that really should excite all the players in the market. See, if you look at the volumes of agri commodities in terms of percentage of the entire derivative market, entire derivative market means it also has equities and treasuries, etc. It's about 9% globally. Whereas in India, I don't think we are beyond, a few basis points. So as a fund house and as a player in the market, and also my esteemed colleagues would recognize that we can only go higher from here. And the other thing which also makes me personally positive why this market, agri market, is poised for growth is that it is, if historically, if you see, the agri markets in India are at a similar space, similar zone where the equity markets were, let's say, 15, 20 years back. They were limited liquidity, limited players, and limited scripts, etc. And the symptom of less liquidity and a small market is that you have very high cost of capital. So most old timers would remember that we used to have a badla which used to run in very healthy double digit terms. So we are seeing a similar sort of a situation in the agri commodities. It's not a universal fact. There are not every commodity is facing that a high yield curve, but I think it's a symptom of less liquidity. And you see what has happened if you draw the parallels with the equity markets. What has happened in the 25 years? If you fast forward 25 years to today, I think we may have a problem of excess liquidity, but we definitely don't have a problem of lack of liquidity. And what it has done to the entire country and to the entire ecosystem is that today, even smaller players are able to raise capital through these capital markets and free up precious debt, equity, and bank loans. So I think something similar will happen when the institutions enter into agri commodities in a big way, and not as an intermediary, but as somebody who have skin in the game and who are investors. The liquidity will increase. It will percolate it to the lower half of the pyramid. You'll see the cost of capital going down for the lowest denominator, and that itself will be a game changer and a force multiplier for the entire country. Now, in terms of GDP, the agri commodity may be 1/5 of the entire GDP or probably less. But in terms of people it affects about 50% of the population. So I think there is more than just a commercial case or an investment case in developing this market. So we are very excited about it. Obviously, I think what we should not do is try to reinvent the ecosystem and the regulations. Let us see what best can be done within the existing regulations. We can always debate about the products, whether it is ETFs or agri or standalone or hybrids. But I think the fact of the matter is that we should make a beginning. And, I think the Indian market, which is now, whether it is a debt market or equity market, it is shown it is world class, if not better. I think we'll see a similar sort of journey in the commodity markets, in the agri markets also. So I remain extremely positive on this space.
All right, good to know. I got really stuck when you said those numbers there, that just 9% of the global markets is actually agriculture. And I'm assuming, decimal points when it comes to Indian markets. So this one is to you, Abhishek. How mature would you say in the last few years the Indian institutional participation or the trading or the investment community has become as far as the agri space goes?
As far as the agri commodity space is concerned, I think it's still in its early stage. So we need to see more and more participants, especially from the institutional investors, because since in 2019, when SEBI notified that now mutual funds can invest through the commodity derivatives, the market had just started to realize the gains that it can get from the commodity indices. Now, AgriDex was the first commodity index that we have launched in India based on the futures contract of commodities that are traded on NCDX platform, and it has given a very good returns in last 1 year. If you compare last 6 months, it has given more returns than the equity indices, having a less volatility compared to other equity indices. So now this is the time, I would say, retail investors, institutions, along with the value chain participants should come up and start taking part into this. As Vikram correctly said, if you compare the equity space, a few years back, it was not that growing, but now same spot wherein the agri commodity has arrived. Now people will start slowly and smoothly will start realizing the commodity as an asset class, and they'll definitely use it for the portfolio diversification in the future.
Also, Abhishek, we do understand that there is an audience now when it comes to the agriculture space. What has been the growth in that sense? As Vikram said, we can always debate about the kind of instruments that there are and that is needed. But what is the right kind of audience when we talk about indices, when we talk about mutual funds? Is it already existing? Does it need more awareness? Because, more and more people that I speak to, they say that we do understand agri space. These are way too sophisticated instruments for us to understand.
Yeah. So Indian agriculture sector has been the most resilient that has grown during these unprecedented times. That's why structural products like agri indices suit the requirements of retail institutions and value chain participants. As I said earlier, traditionally investors have been comfortable with equity and debt only now. Even though commodity asset class is not that still common with retail investor in India, but easing with more and more guidelines from a regulator, I believe that through a familiar instrument with the help of mutual funds, a retail investor along with the institutions can take advantage of being professionally managed of these funds. So historically, if you see, there has been little correlation between the movements of this asset class and that of traditional assets such as equity and debt. This translates into better diversification of portfolios that hold commodities, which are being able to generate more stable returns as compared to one which holds a single asset such as equity. So one can invest in a commodity index both directly by buying the contracts and indirectly through the funds, wherein here the important role of mutual fund comes into the picture.
Vikram, how would you read the institutional participation as of now? The mutual funds and commodities have been there for almost a year and more now. What has been the feedback? What are the opportunities that you see? What would you say needs to be changed from here on?
So I like to answer this question in two parts. First of all, there are certain, obviously, the capital markets historically have always taken baby steps whenever it comes to new asset classes or new products. And there's nothing different this time. So I think, so what has been approved as of now is hybrid products. Now, there is one thing which is coming in the reason why not many fund houses would have launched these products. There are certain, issues which are coming in the way and which are inherent to the regulations. See, when you change the texture of the fund, the fundamental attribute of a fund, which means adding a new asset class or changing the fundamental attributes of it, then you have to take all the investors on board. So you can imagine somebody who has some fund who has a hybrid fund which has got 10 lakh investors. You have to take all of them on board, 10 lakh of them on board before you can make the changes. So this has created a lot of inertia and resistance with a lot of fund houses, especially so because there are not many types of hybrid funds which are available on the shelf right now. Most of them have already been launched. This, quite frankly speaking, this has been the technical reason why not many fund houses have jumped onto the bandwagon. Now, obviously, there is also some sort of a thought process which needs to change. The fund houses, every fund house needs, the way we have recognized, the way others also have recognize, but still we remain in minority as of now. They have to recognize that it's a full-fledged asset class, and it needs that treatment, and it needs that kind of infrastructure and resources. Also, I think that is the bad news part of it, but the good news part of it, globally, if you see let me speak to the agri commodities right now. If you see the fund interest in agri commodity is increasing, and I won't be surprised that in the next 1 or 2 years you will see lot more activity happening globally, and hopefully in India also on the agri side. And there are various reasons for that. When we talk about agriculture, the trends like urbanization, growing population, climate change, these are actually shrinking the land available for agriculture. And there's a limit to how much yield you can increase by fertilizers and pesticide and all those things. So you are in a situation where the population is either constant or increasing, but the land available and the yield available to you is actually is either tapering or it's stagnant. So you could actually see some sort of a structural bull run in the agri commodities. Obviously, I have to qualify it that every government in the world would like to be very happy to puncture this bull run. And also, since agri commodity tends to be very political hot potatoes, so there'll be a lot of resistance to that. But we are seeing, and add to that, the water scarcity that we have seen. So water scarcity is not just a developing world phenomenon. We have seen water scarcity in certain developed countries also. I mean, you go to West Coast last year. If you would have gone to West Coast of US, you would have had problem having running water which is unheard of in a country like the US. And we have heard this horror stories about water scarcity in South Africa and India. I think we have patches which still remain drought prone. So if you add all this to that, and also the trend, another trend which is irreversible, that countries, the middle income countries or the developing countries like India and the Southeast Asia peers and even China, when they become richer, there will be more consumption of food. It's not that the people eat more, but if you go by the statistics of Europe and US, there is a lot more wastage. The more affluent the society, the lot more wastage of food happens. So these are certain trends which are colliding with limited yield and limited agri, land available to produce the agri commodities. Now, how will it end? It is very difficult to say. It's very difficult to forecast that, because obviously, as I mentioned, that there will be a lot of resistance to increase in prices. But I think if you, from an investor point of view, from a risk management point of view, this is one question mark which is hanging over the global markets. And as of now, nobody has an answer to it. So one of the ways would be to take exposure in agri commodities to either an index, a diversified fund, or an ETF, and then have at least something in your portfolio which sort of participates when if the worst what we are feeling happens.
Well, absolutely. You really put it very, very proper, Vikram. The food, feed, fuel is just one part of it, and then the water is a different debate altogether. And it is a no-brainer that there's as much land and the population is increasing. And as you said, the affluent part of the society, it does demand more and more food going forward. Viral, how would you put this across? I mean, this is an asset class which is growing. This is a space that screams for investment, hedging, and making use of the kind of instruments that we have. Also, the fact that this is a space which is also seasonal. How would you look at the agriculture space in totality and the kind of investments that it actually can take?
So, it's a very interesting question. And, I think my fellow panelists and I are trying very hard to kind of increase the participation from both retail as well as HNI investors to, increase their exposure to the agricultural side. Now, if you look at the construct of the agri markets in India, at one end we have the retail investors who come in and participate purely from a positioning of taking some delta out of the market, speculating in the market as well. And the other side are the value chain participants who essentially want to offload their price risk. They are moving thousands and millions of metric tons from one part of the planet to the other, and they obviously need to have a mechanism in which they are able to express or hedge their price risk. And that is the time where the participants in between are the institutional investors who will either create structures where you are providing some sort of a cash and carry arbitrage to reduce the holding period of those commodities, or else you are looking to diversify and give exposure to investors who want to play out the inflation theme. One of the things which came to us a lot during this last 12 months is how do I participate on the agricultural side? No, indices have been launched, but again, these are futures contracts. Till the time we don't innovate on the product side of it, where we launch ETFs which mimic the performance of the indices. We have in India indices which mimic bullions, which mimic the base metals complex and the agricultural complex. So we have a very well diversified bouquet, but within that, we still don't have any ETFs which will mirror that. And that is, in my opinion, a fantastic place, because we have seen the performance of the Nifty linked ETF products, which have done phenomenally well for retail and institutional investors as well. The second part is a little bit more product innovation using options. And I thank NCDX where they have started getting more farmer producer organizations to come and start participating in options. So after a while, we are seeing some amount of liquidity developing over there. Once options start getting more active on the agricultural side, institutions such as us, as well as other market participants as well, will be able to create products where we can give a limited upside or a fixed upside to a particular stock or a basket of commodities over here as well. So new set of product innovations will come. Till that time, it's a lot to do with educating the clients, getting them to understand how the intricacies of the agri index works, what is the kind of opportunities that you can exploit on the cash and carry side. I'm sure as more custodians start getting empaneled and they are allowed to get more funds and institutions in place, Vikram and most of his other colleagues as well will create new structures over there. So the road ahead is very clear, Manisha, to that extent, where we know that these are the 4 or 5 things which will get us to the space where the percentage of agricultural trading in India, which is, as Vikram mentioned, a minuscule couple of basis, will go to a much more meaningful 2 and 3%. But at the same time, a lot of work has to be done at the background. The good part is that this bull run has prompted the appetite for the high net worth individuals to come back and explore commodities. That wasn't the case 4 or 5 years back. We had an episode in India. After that, the global markets were in a space of going nowhere, or in fact, commodities were more in a deflationary trend. So during this inflationary trend or during this resurgence that we are seeing in agriculture commodities time, this is the best timeline for us as an industry to go out, meet up with as many clients as possible, educate them, and pave the way for the development of new products over the next 6 to 8 months.
Well, let's get in Abhishek to answer that really. Abhishek, why don't you tell us about, various questions that Viral put out, and I'm adding a question of mine's own to it. Talk to us some more about the indices trading and what is the right set of audience for that, and have we been able to identify, create awareness, and join them in?
So, Viral has covered one of the concerns that everybody has, and I think it's correct to say that ETF is one of the part. If you look at the global commodity indices, commodity ETFs are high in popularity since they render investors with exposure to commodities without having the need for learning how to buy futures or other kinds of derivative products. So ETFs on commodity indices are highly liquid and provide opportunities for the retailers and institutions to participate in the commodity segment through these indices. Gold, SPDR Gold Share is one of the best example, and they provide innovative, related, cost efficient, and secure way to access the gold, the commodity market. So, to come to another concern that Viral has raised, definitely we need more and more norms. And to talk about the kind of the clientele that we are looking at is, since these are the sectoral indices which we are coming up with in few months, we are specifically targeting those who are already in this sector. Like we are coming up with the Guarex and Soidex. So these are the two areas wherein the hedgers or the traditional players are already there, trading in underlying commodities. But along with that, since these are the cash settled products and they have the less margin and they don't have delivery as such in this indices, so retail participation is one of the most important area that we are currently looking at in coming months.
Vikram, we want your sense as well. How would you look at commodity indices as a way of investing and as an instrument in the space?
So I think, as my colleagues in the panel have said, that there are commodities that have to be looked from uh, multiple time frames. In the near term, they are extremely sometimes violently mean reverting, because so suppose there is shortage of corn, you can go and plant it. But if suppose there is a shortage of gold or copper, it takes 3 years for the mine to come up and running. So there is a short-term play which is tactical in commodities, and there is obviously a long-term play which has got tailwinds of most of the factors that I mentioned. Water scarcity, etc. So the investors will have to take a choice, take an option, whether they want to continue playing it tactically, or they want to really take it to the next level. Also, I think the other aspect is that one thing which goes very well in favor of agri commodities, that if you compare it with the you know the available instrument which can be compared to it on risk reward basis, like the credit funds or risky bets in the capital markets. The good part about agri commodities, and for that matter the commodities, is that this risk is insurable. You can insure the underlying, whereas you cannot insure anything in any of the any of the products which can be compared to agri commodities. So, but I think there's some work needs to be done over there by the entire ecosystem, exchanges, fund houses, and the insurance companies. If some sort of ecosystem is built which can protect the interest of the investors, especially the retail investors. I mean, everybody understands that these are there's a risk and reward ratio. People are, anybody who's been investing in the capital markets understand that you can lose money, as long as those parameters are acceptable to the mutual fund investors. Because you have to remember, there's also a guy who's investing 500 rupees in the mutual fund. So as long as those parameters are put in some sort of a ring fenced and controlled, I think probably it's a good idea to start thinking on that directions, and maybe we can start with index funds and ETFs, and then take it from there. So yeah, so this is what I think is should be the journey of the agri commodity space, in my opinion.
Very well put again, Vikram. Viral, let me come to you. So, what is your sense on where do we stand on a rank of 1 to 10 perhaps, on how mature is the Indian audience to take a look at all of these instruments that are already available? I mean, even with what we have, you could always, there are spreads, there are options already available. And all we seem to be talking about in a broader media sense is perhaps inflation, prices below or, above MSP, the weather concerns, and most often they're not coming back to inflation yet again, and the global imported inflation. So when it comes to various stakeholders making use of how we can with these instruments, what kind of a maturity is there? If there was a new participant who wanted to start dealing with this, start testing the waters, what is available right now?
So it's a fair point. It always brings a smile to my face when we talk about MSP and inflation, because in more ways than one, the government, by raising the MSP year on year itself, is fueling the inflation to a certain extent. But when you look at the construct of the market again, and India does provide a very, very efficient ecosystem where you can trade kharif crops, rabi crops, you can trade edible commodities, non-edible commodities, softs, everything. And that goes to show that there is no dearth in terms of products that clients can participate in. The good part is that whichever segment within the agri space you want to have an exposure, you can actually take an exposure over there. Some commodities obviously, are very, very unique in the Indian context, that we also trade spices and guar. I don't think those kind of products are available anywhere else in the world. So within these buckets, there is always some action or the other. You will have possibly, because of weather concerns, either the kharif crop will be better than expected, worse than expected, which will create its own set of demand supply scenarios. But there is always some play in one or the other asset classes as such within the commodities basket. As you rightly mentioned, sometimes you look at the calendar spread, sometimes you look at intercommodity spreads, sometimes you look at spreads between old crop and new crop, because a lot of these products are traded almost 10 months out of 12 months. So there is a little bit of leftover or lag over thing where the last traded contract of a particular marketing year versus the first traded contract of the new marketing year. And there is a lot of statistics which are available because we have more than 15 years of history of trading these products in the Indian context. Again, it goes back to who is selling it. As brokers, as market intermediaries, as market participants, it is our responsibility to put this information out, to put this research out to market participants. There are some challenges when it comes to trading in agriculture commodities, especially on the fact that we have a 30-day cycle, out of which 5 days is the delivery process. So every month there is a move to move your positions from the front month of the contract to the second month or the third month. We also have challenges that if a participant, let us say a HNI or a retail investor, wants to actually take physical delivery, you need to have GST registrations in multiple states because every commodity gets traded and settled in minimum about 2 or 3 states across India. There are some norms on whether you also need to have the corresponding Mandi registration number or the APMC license for that particular state. Again, post the new farm laws that have come in, there is still a little bit of uncertainty since Supreme Court has put a stay on that particular part. So in a nutshell, there are challenges for a retail or an HNI to take physical delivery, which is why the role of funds becomes all the more important. The role of having a collective investment scheme, whether it's a mutual fund or an AIF or a PMS services, becomes all the more important. Till that time, there are enough products, there are enough opportunities in the market. The advent of sectoral indices on the NCDX is a very, very welcome step, because what happens is when you try and trade an index which has everything in it, right from Kharif to Rabi to spices to pulses, it becomes difficult to estimate of what would be the move of the index, right? There could be some offsetting factors in that. But if at all I'm bullish or bearish on only the edible oil segment, when I have a sectoral index, then it is much easier. It's almost like trading a bank nifty versus a nifty, right? Bank nifty, I'm sure that I'm trading only the constituents of the bank, so I can have a much more calculated participation over there. So these products are definitely the need of the hour, and I'm sure that as more and more participants are getting exposure to that, you will probably test the waters out, see it for yourself for a couple of trades, understand the nuances of that. But this is the way to go. So the roadmap is, like I said, is very clear, and I'm glad that the exchange and also the regulators, in the past we would always have a scenario that if prices of pulses went up by 10, 15, 20%, you'll have a lot of clamor to ban some of these commodities. A matured market is the one where the regulator understands the importance of the futures market. There is no proposal or there is no thought of banning anything. They are keeping a vigilant check on that. Margins are in place, but market is very, very organized. And that's the beauty of it, which will give a lot more confidence to participants like Vikram who would want to put it in a fund place. The last thing you want is uncertainty. And this 5-year period that we have seen after SEBI coming on as a regulator, this is the time where they are being tested. And to my mind, they are doing a fantastic job of regulating the markets.
Fair point there. Vikram, what is your sense when it comes to sectoral indices, to existing agri indices? What has been your take, and how willing would you be to include that in?
So we tried a few industrial commodity indices in our multi-asset fund, and I think it's still a market in its infancy. But yes, it has a role. Today, for instance, if you want to take exposure in nickel, which is the hottest thing as far as the EVs are concerned, we don't have a nickel company or silver or whatever it is. So I think these ETFs will be a very big enabler for investors who are aware enough or who are vulnerable to the global trends in their portfolio or whatever in their trade or business also. One of the things which we should be thinking on a pan-national basis is inflation. Now, again, after a long time, inflation has been again hitting the headlines, and everybody has their own views on it. The central banks seem to be talking it down. I hope they are right. But then, we have our own opinion. And, one of the reasons, if you see the basket of inflation in the developed countries, food is a very small part of it. I mean, you will never hear about food inflation in most of the developed country. And the reason for that is that they have a very, very strong, very well-developed food processing chain and industry. Now, food processing chain and trading chain leans very heavily on agri-derivative markets. And who are the people who are providing the liquidity on the other side? It is the hedge funds, it is the mutual funds. So I think now it is a chicken and the egg situation. Whether you want to build a processing industry which sort of participates in these agri futures and derivatives, or you want to build the fund side of it, or you'll never get the right mix. One will be always ahead and behind the other. But I think today, thankfully, commodities are under SEBI, which has very a great track record on shepherding and developing complicated markets like equity and debt. So I'm sure that we are in the right hands, and it doesn't matter. I mean, the fund side of it can sort of proceed, and once the processor, the traders in India, the local traders, I'm not talking about the overseas traders, they know they have access to the global commodity futures and options. So once that is done, I think one will feed into the other. If you have an extremely liquid, deep agri commodities market, I think and the transaction cost is low, the roll yields are low, and the cost of capital is low, then I think there is an incentive for every mid-sized, large-sized local trader to have a look at it. And we have seen that. We have seen a lot of the the Indian companies which are dealing with industrial metals, whether it is the copper companies or aluminium companies, or they are accessing terminal markets like MCX or LME or whatever, to hedge or to enhance whatever is their philosophy of using these ETCDs. But I think both can coexist, but both cannot exist in isolation. You cannot have a very a strong, a very large food processing industry without having absolutely a tiny agri derivatives market. So I think this needs to be developed, and I think once it is developed, we can probably say goodbye to food inflation, and only when some sort of a event of biblical proportions happens, we don't need to worry about food inflation forever.
Oh, well, absolutely. A third straight year, and we're looking at a record crop this time around as well. We can't be really talking about inflation there. This one is to you, Abhishek. So, very well put from Viral and Vikram as well. How would you look at the existing agri products and sectoral indices? How would you look at the audience for this as well? And what really prompted the exchange to bring it about? And do you see enough market to begin with? You're on a mute, Abhishek.
Oh, sorry. So one of the thing is agricultural sector is the backbone of our India, and Indian government has always laid emphasis on providing better prices and transparency in the agricultural market. And the participation that is seen in the commodity segment globally can be used as a motivation for the domestic institutions to increase participation in the indices specifically, because this is one of the product wherein the retail kind of investor will not get involved into delivery kind of stuff. So this is one of the thing that we should really look into it. And as an asset class, commodity is of course unique, and the way the economic forces that determine the price of commodity are different from the economic forces that determine the price of many other asset classes. So the commodity indices provide higher returns with low volatility than many other assets that are available in the market. That's why I think now is the time to start tracking it, and using it as a hedge tool is one of the most important thing that one can do from apart from the traditional products which are already there. So this is how I think about it.
Okay, that's a lot of conversation. I really now want to turn this conversation towards on how should a participant approach these markets. Mira, let me start with you then. How should you be looking at these markets for a retail participation? How well can you make use of the spread opportunities and also sectoral indices?
I think from a retail participant side, this brings, like I said, a very interesting product. Because of the very fact that after every 25 days there is a delivery process which starts onto the exchange platform. So for someone who wants to have a cash settled contract, the indices make a lot more sense. And basically, people who have a view about the movement of the edible oil market, whether you're bullish or bearish, right now, after the Fed meeting, we are seeing a reversal of sorts across the board in most of the agricultural commodities as well as on the industrial commodities side. So if someone wants to have a view that, possibly for some time the inflation levels will come down, they might go short on the index itself. So, it's a very important tool for retail participants, because then you don't have to spread your orders between a soya bean and a mustard seed and a soya oil. You can just go long or short on the index, because more often than not, all of these three products will move in the same direction. However, one is a Kharif and one is a Rabi, so you get the benefit of both of these contracts in the index itself. When we look at also of how does it impact the retail investor, so here are the finer nuances of the thing, that right now most of the markets are in a backwardation, where the current month prices are higher and the next month prices are lower. And if we look at the international experience, this is where a lot of money which rides on the ETFs, which participate or mimic, indices like the Bloomberg Commodity Index, is because of the backwardation nature of this market. The investors actually stand to gain, because every time the contract rolls over, you actually get the same commodity at a lower price. And this is what we call as the length of the commodity. So, these are finer nuances which so far we have not been able to educate a set of retail or HNI investors. But because of the arrival of the indices, we will be able to demonstrate of how beneficial it is for you if you hold the index for a period of 3 months, 6 months, 9 months. We are already able to see that in industrial metals. But now we'll be able to showcase them even on the agriculture commodity side using the index. So, for some of the high frequency traders, I would say, or some of the people who have a better understanding of quantitative analysis as well, they may actually use the underlying instruments of the index versus the commodities itself, or the index itself. So, it will create its own set of new liquidity in the market. We are very excited that the sectoral indices have made their appearance on the exchange, and a lot of product innovation will come. Some of them would be in terms of looking at a spread, or maybe, like I said, an arbitrage between different components of the index versus the index itself.
Fair point. Abhishek, would you say that it's easier to, bring in people who have an underlying exposure to the commodity in comparison to retail or HNI investors into this space? I mean, is that what is the mix right now?
Yeah. So hedgers are already, having the underlying commodity with them, and they are doing the traditional hedging with the futures or with the commodity which they have in physical. So now this will add one more step in their hedging, because this is where your margin is on the lower side. This is where your transaction cost is going to be lower than the other hedging techniques, and you have the cash settled product. So it is going to be very much helpful for the traditional hedgers, those who are already doing it in some different way, but this is going to add one more step in their portfolio. And this is one of the things that they will definitely consider. There are other factors that this time what we are coming with the sectoral indices, we have made sure that instead of these people, those who are mainly into mandis and APMCs, holding the physical commodity, they don't need to deal with like the calculation of how much percentage or how much lots that they need to buy of the index so that they can hedge perfectly. This time we have come up with the method. They can simply discuss in their own language, like in MTs and all that stuff, so that they can easily understand like how much lot they need to buy or sell to hedge their position.
Vikram, there is one part which is the stakeholders, as we just spoke about. These are the hedgers. They can be corporates within commodities. They can be exporters, importers, buyers, manufacturers, processors, etc. These are stakeholders within commodities. When we talk about retail participation, or rather retail investors, institutional investors, when it comes to including agriculture commodities as a part of their portfolios, how far have we come into that one, and what more work needs to be done there?
I think first of all, the investors need to be very clear what is their investment objective. Is it returns, or is it lowering the volatility of your overall portfolio? If you're looking for returns, then index funds and ETFs are the best way forward. unless you are a specialist in commodities and you know your stuff and you know your soya and guar, etc., that's a different thing. And I think those kind of people, anyway, we don't see on the mutual fund space. So if you're looking for returns from a retail investor's perspective, the ETF and the index funds are well suited for you. If you're looking at using the agri commodities, which have a very, very poor and sometimes negative correlations or no meaningful correlation with any other asset class whatsoever, then hybrid funds are the way forward in that, wherein the commodity part of the hybrid fund um, may hold some agri commodity, or maybe going ahead, if there are certain commodity themed funds which can hold a combination of commodity agri commodity equity and agri commodity directly. So that could be the ways for somebody who's looking to, some investor who's looking to use agri commodity as a portfolio diversification. Now, in terms of the kind of work which needs to be done, as I mentioned, I think we need more products. And then the bottleneck today is that there aren't any product left to be launched as far as the menu is concerned. So we need more products on the menu, especially the ETFs and index funds to begin with, and also certain maybe go slightly beyond the traditional hybrids. And once that happens, once new products are available on the shelf on the menu, I'm sure the it's not just us. A lot of other the entire industry will take notice, and in time you'll see more participation from the fund houses also and from the investors also.
You did talk about a few commodities there, Vikram, but if you had to plug and play some commodities, agriculture commodities, are you out scouting? Are you looking at any of them? You think that the investors would understand them better, easier?
So, Manisha, ours is a buy and hold strategy in the mutual fund. We don't take any tactical calls. I mean, obviously, the events may force us to take a tactical call. That's a different thing. But mutual fund, by DNA and by philosophy, not just us, everybody, it is buy and hold. And whether it is gold ETFs or gold futures or crude oil or metals and all, we are simply making them included in our multi-asset fund and trying to see how they can improve the alpha or how they can improve the beta of the fund. So for us, it's a very technical thing. If by adding agri commodities in a multi-asset or a hybrid fund, if my alpha is getting generated, or if my beta is managed as per my own view and expectations, we are open to it. We are we are not averse to it. But I think I would like to hazard a guess. Initially there will be more inclination to try out commodity indices first vis-a-vis the individual commodities, because there is a question of scalability also. For instance, 1,000 crore or a 5,000 crore fund, even if it wants to invest 1% or 2% or 5% into agri commodities, we need to have that kind of liquidity also in the market, and we don't want to be the elephant in the room. That's the last thing we want to do. So yes, so it's still a work in progress. But yes, if it improves the alpha, if it manages the beta for us, then why not? I mean, in the end, we are obliged to offer it to our investors.
While of course, as you said, the percentages in the global markets may be lower at around 6% or 9%, as you said. But when it comes about coverage in the global market, that is quite huge. And there are funds and there are those money managers who understand agriculture commodities in the global markets, and they understand various instruments in the global markets as well. How soon or how far do you see that happen in Indian markets?
See, the downside of allowing funds into anything, any space is, whether it is any asset class, is that there will be distortion in prices. Now, one may argue that the distortion may be short. You see what happened in soya. Not entire of that it was driven by supply and demand. There were a lot of funds, there were a lot of hedge funds which were involved in that. So that will happen. But then you have to understand there are very, very smart traders, commodity traders out there, and it's in the global battlefield. Especially if we stick to agri commodities, it's a battlefield between the commodity traders, the large houses, and the large funds. So it's evenly matched. It's very difficult to distort the market for any length of time. So that is why we need to build that kind of an ecosystem, that the funds should not be, should be able to bully the industry, and the industry should not be able to bully the funds. So we need to have some sort of a balance over there. And yes, you will have an odd distortion in the market, but then if you do a SWOT analysis, being scared of the distortion vis-a-vis, creating, increasing the efficiency of the entire agri ecosystem so that it is to the benefit of 50% of the population of the country. I think for me, it's heavily favored in terms of trying it out, with checks and control, and not being too worried about distortion. There will be an odd event or so which will get magnified in the press and all, but I think in the longer run, we will get through that. There'll always be a learning curve. Let's not kid ourselves. There will always be incidents and accidents. But I think let us not get scared about it, because every asset class has gone through that journey.
Oh, well, yes. And I'm not even getting to weather index. Abhishek, I hope you're listening on to this one. All right. We have around 10 minutes for this meeting to go on, but I actually want to come to each one of you and get you a final word in sense of opportunity and challenges here. So we do understand on what work has been done, what can we get in through, and what still needs to be done here. So Veera, let me start with you onto this one. You've discussed a lot, and yes, there is a lot to be said, and the time is really less. I mean, there is a way that international investors have made use of the weather concerns. We've seen corn, wheat go to multi-year highs, and they've come back from those kind of levels as well. As Vikram said, markets will see some aberration, and we'll see some speculative froth there, but it will definitely come back to fundamentals. But from where we stand and the kind of instruments that we already have, and some are in pipeline, how do you look at this market opportunities and challenges?
Opportunities are immense. I don't think there is any debate in terms of opportunities that are there in the market. Vikram has also demonstrated in terms of the market size that is available to us. Like I said, it's an opportunity where as market participants, we can structure it, package it either for the retail investors or the high net worth investors, or even for the new set of market participants, which is the collective investment vehicles which are there in the market. What we are seeing already is some of the alternative investment funds have forayed into the commodity space, especially the agriculture commodity space, where they have structured the entire process of a cash and carry arbitrage. And I'm sure that a lot more will also come in. What it will do is create an entire ecosystem where there is more commodities available inside the exchange ecosystem, inside the exchange accredited warehouses. There'll be financing opportunities available. There will be new product innovation around the use of indices as well. So very, very hopeful that over the next 6-8 months, we are able to seize this opportunity, where I would say all stars are aligned, where there is so much of focus around the agricultural commodity side, and that we should be able to translate into a business opportunity as well.
Vikram, what would you say? What, according to you, is an opportunity here? How would you summarize it, and what still needs to be done?
So, Manisha, if you go by our experience in gold, which was started way back in 2007, and initially we were a bit blindsided, because and not only us, most of the fund houses were actually selling gold or rather pitching the gold ETFs to the mutual fund investors, which are traditionally in mutual funds because of equity or high yield debt. And that is why the gold story was very, very slow. But what's happened recently in the past few years, we realized the certain traits of the gold funds or gold ETFs or commodity, or for that matter any ETF or any index fund, that there are certain things which are very hard to ignore. First of all, the liquidity the ETF provides is much, much better than the liquidity of the underlying physical commodity. So there was a connect. Indians buy gold by any on a bad year, we still end up importing or rather consuming 800 tons of gold. It's a huge market, 3-4 lakh crore market, and the connect was that if you are buying gold, and if you're not sure in which form to buy, then you might as well buy ETF, because the impact cost is very little. You can always make the decision 5 years, 10 years down the line when you want to convert them into jewelry or bar or whatever it is. So I think a similar connect has to be made in the agri industry. What is the connect that we have with the investors? Why would they like to invest in agri? Whether it is hunt for yield could be one thing, and hunt for returns could be one thing. I mean, I'm assuming that Bitcoins will not become mainstream in India. I mean, thanks to Bitcoins, volatile commodities like natural gas and silver look very boring actually as of now. So I think that volatility, the juju is out of the system. People are not afraid of the volatility as far as agri commodity is concerned. But I think we will have to find a connect with the investor, wherein we are providing a solution to the problem he or she has, or we are trying to cater to a demand which is already exists and which is probably not visible at this point of time. But we tend to be very sort of the short termism is something which we all suffer from, since the products are not permitted. There is no effort on that. But I think once we hear some sort of a positive noise that such products will be permitted, but I'm sure somebody, I mean, there's enough gray matter in this country. Somebody will figure out what is the connect and provide an excellent solution to an excellent to a long-standing problem, wherein agri commodities will fit in very well in the fund ecosystem. So I'm pretty hopeful for that, and it may take some time, but yes, it will happen.
So, Vikram, let me be a devil's advocate on what exactly you said. You talked about Bitcoin, and not too many people understand blockchain or the platform, but they are still investing because they find returns there. When I compare this to agriculture, a lot of people have said they don't understand agriculture, and it has been volatile. It has doubled in prices, especially when it comes to edible oil prices. But how many people did actually go into it in sense of a portfolio diversification? First question. This one is to you, Vikram. And the second is, when we talk about agriculture, there is this whole farmer thing, consumption, inflation, GDP. How would you tackle it in a way that it becomes a platform where people can come in, invest, trade, or hedge?
I think Bitcoin, in a lighter way, Bitcoin is like a Rembrandt painting or a Stradivarius or a violin, which you cannot ascribe a value to it. It's you may say $1 million, I may say $10 million. And people understand this because it is, you can't understand it. That is one thing. But Bitcoin has also uses. There are certain countries like in Latin America which are using Bitcoins to ensure there is no, people are not using money to buy, contraband goods and all. So similarly, I think in agri, you will see that as the economy grows, and obviously we are dealing with millennials and the new generation which is coming in, which they have embraced Bitcoin. So I'm sure it makes our job easy to sell other esoteric products to them, or to get them on board. But I think from a nation's point of view, this is one. I mean, I am not able to understand the reason that why the terminal part of the market. I mean, so much of the mind space and so much of resources goes into developing and sustaining the agri markets, and it is the discourse, and it is also a very important discourse in the entire country. When so much of resources are focused on that, why we can't focus the resources in developing the terminal market, which we all know globally. I mean, we don't need to reinvent the wheel. Globally, we understand that whether it is industrial commodities or agri commodities, you need a deep terminal market, you need a deep derivative market to support that. So I think it's just a matter of time before it becomes part of the mainstream policy. But obviously, it will need some pointers, it will need some, concrete, steps and evidence and data to support this notion. Now, with regards to the aspect of it creating distortion and disturbances, unfortunately, I think that will something which will happen. But again, when you talk about, if you restrict yourself to those commodities where India is short of, edible oils, or whatever we are importing, at least in those, you could have sectoral or sub-sectoral indices where there will be definitely a demand from not only the mutual fund investors, but also the investors who know a bit more than the above average investor about agri commodities. So yeah, so there's always be a starting point, and once we get everything moving, once everything smoothens, and everybody has made their own set of mistakes, and we have become wiser and richer, I think then it is time to go start moving into other spaces of the agri, the food commodities and all. So, but I think again, I will again reiterate that if you do the SWOT analysis, that increasing liquidity to the lowest denominator in the commodity markets vis-a-vis distortion in price, you have to take a choice, because you cannot. It's like having a fund, a dream fund where it always makes beats the benchmark but has less volatility than the benchmark. So that's only possible in theory. It's not possible in practice. So I think some sort of a compromise has to be made for this thing to move.
Well, yes. Abhishek, you heard both the other panelists. What is your sense now? I'm assuming you have a lot of opportunities to list out here. How ready are the markets? How much do we need to still educate them? And when you talk about a diversified portfolio, it can't just have two things there. I mean, it has to have agriculture. I mean, this is something that has been moving so much. What is your sense? Final comments.
Yeah, so the main function of the exchange is to provide the platform to hedge, the positions which people have in, underlying market. So if someone has a physical position, exchange main platform provides the instruments through which one can hedge, and one can do the price discovery. So adding commodity indices into that will definitely give new and better ways, to all sets of participants to use indices as a benchmark, so that you can compare the performance of commodities as an asset class with the performance of other asset classes such as stocks or bonds. You can use indices as an indicator. You can use the commodity indices, an indicator of economic activity, possible inflationary pressure, and the state of global economic production. Along with that, investment vehicle is one of the best thing you can use. Indices as a tool. There was one study done by one of the mutual funds recently, which clearly stated that so if you add commodities into your portfolio, even if 10% commodity and 90% equity, you will get better returns, or somewhere with the less volatility. So low volatility is one of the factor, because commodities are the one asset class which is have very less or low correlation or no correlation with the other asset classes. So this is one of the ways for the retail investors or for the mutual funds to diversify their portfolio, to reduce the risk for the higher returns, and with less cost. So that's my take on this.
So we also have an audience question that we've chosen here from GDS Kumar, who's asking rather that for a beginner, for a retail investor, what kind of a book or literature would you suggest for making informed decisions so that you don't lose your capital when it comes to agri space? Abhishek, you want to take that?
So am I supposed to answer this, Manisha?
I thought she asked.
Is this for me, Manisha?
Yeah, please go ahead. I mean, you have you have books to refer to for new beginners. Please go ahead. Yeah, Abhishek.
Yeah, so there are multiple sources available in the market. You can go on the agricultural websites, wherein the detailed information is available about the demand and supply, the production, how the import and export is being currently happening all over the world, as well as in India. So the basic things to understand the agriculture market, because agri commodities are part of our life on day-to-day basis. So you know the price of chana, the price of wheat, the price of rice, price of the soybean. All you need to do is look at the look at the bigger picture. I think trading in commodities or understanding the commodity market is much way easier compared to the equity, because here you don't need to understand the financial statements or the organizational structure or something like that. Here all you need to do is understand what's the demand and supply, what are the geopolitical situations, how the weather is currently going on, and all that basic things. If you understand, I think you will be in much better position to understand the agri market.
All right, that equips you for sure. We have another question, this one from Sagar Solanki. He's asking how to find which commodity is useful. Viral, you want to take that?
I saw the question. I'm not sure how to interpret that. But I think by default, all commodities are useful. Either they're useful in, for consumption, direct consumption, or for indirect consumption, one way or the other.
So let's take it as, what is the big, if you are a beginner, what commodity should you start trading in, start investing in if it was an agriculture space?
I would say, you try and figure out what are the international referenceable commodities. Commodities, unlike equities, is a global market. The price of gold in India versus the price of gold in the US versus the price of gold in Europe will more or less be the same. Adjusted for the currency and the import duty part of it. So when you want to start participating in agricultural commodities, first get a sense of how does the global market or which are the commodities which are traded in the global markets which are also available in India. So possibly you can start with commodities like soya oil or cotton or palm oil or even soybean for that matter, because there is a lot of literature available over there and there is so much of data available in terms of what are the prices in different parts of the world and what are the prices in India, because either we are a consumer of the entire production that we have, in which case we don't need to import it, or we are an importer or we are an exporter. So these are the three parts to it. And once you are connected with the global market, either you are an importer of that commodity or an exporter of that commodity, you will have a sense where our markets will be more or less aligned with the international markets as such. So if you are a beginner, I would say restrict yourself to the commodities which are global in nature before you start getting into more exotic products like spices and guar and all, which is much more localized. So for that, you need to have demand supply scenario only for that particular region or that particular geography. And because it's localized, it's very difficult to kind of connect unless you are a seasoned participant to connect with the trajectory or the price movement of the underlying commodities.
Vikram, let me also put this question across to you. So, if it was a beginner, somebody who's a first timer who wants to get into commodities and wants to start with mutual funds, what is the best way to go through?
Manisha, I think the best place where I would look for, rather I look for data is obviously, I wish we had a 50-hour day. We could read all the books. If somebody is fortunate enough to have the time, then I think they're very lucky, I would say. There's so much to read and learn. But I think a quicker way would be to access the government websites, RBI, Ministry of Civil Supplies. A lot of data is available over there on consumption and the classification of crops, and there's a huge amount of treasure of data. So I think that should be the starting point to understand your country first, because agri is a local subject, it's a pretty local subject for most of the commodities. And that is one way we should look for it. Also, I think when you are venturing into agri markets, you should be very clear about two things: the the time frame and the investment objective. So, anything which has a time frame of less than a year or less than a few quarters is actually trading. It's a tactical call. It's not investment. So, and trading needs a very different kind of skill, technical and maybe news oriented and all. So I won't classify them as investments because I think in fact, if you talk about mutual funds, anything which or rather funds across the world, anything which has got a shelf, any idea which has got a shelf life of less than 2 to 5 years is not even worth betting big money on it. So you got to be very careful what you're actually doing over here. So if you're trading, then it requires a very different type of skills. Also, you need to be very, very clear on why you're putting money in it. For instance, you need to understand the commodity, why it is moving up, and you have to convince yourself first. The most important person to convince is yourself. You may read about it, but ultimately you have to be convinced to be able to invest in that commodity. And if you're not sure about the timing and other aspects, you can always do a sort of a staggered, investment into that particular commodities, and but you'll have to take a call with conviction rather than have a call where you don't get a good night's sleep because you're really not sure whether you've taken the right position or not. So that I think is the starting step. That is what you should try not to do. Is to do too much of trading. If you're good at trading, go ahead. But again, today you'll be competing against the algos, which are so much dominating the exchanges. The list is very long, and I don't think we have enough time. But I think this is a good starting point for every investor into agri markets.
All right, that's a lot of sane advices coming in your way on how you should be starting trade here. But as has been discussed in the last 1 hour, there are more instruments now available. There is agri index. There are sectoral indices which you can make use of and start trading, start diversifying your portfolios into the agri space as well. With that, that's all the time that we have on this conversation. Thank you so much, gentlemen, for joining us. And that has been a very interesting conversation. I've enjoyed, and I'm hoping so have you. Thank you so much.
Thank you.